It is often something that we forget when we're growing up, but it catches up with us very soon. I'm talking about pensions. But if you indeed contribute well when you were active, you might be going home smiling. On PM Express Business Edition, we take a look at one of the biggest pension funds in this country and those who are managing it. That is the SSNIT pension scheme. There have been questions about how can we sustain this scheme going forward with all the external pressures. On PM Express Business Edition, we look at how can we sustain this country's pension scheme and manage it well in the midst of all the external pressures, even though the economy is now firmly stabilized. On PM Express Business Edition, I'm indeed grateful to have the Director General of the Social Security and National Insurance Trust, who is my guest on PM Express tonight. And sir, I appreciate your time so much, and then thank you. Finally, I have an opportunity to engage you. But I'll first want to start with moving from more of a typical private sector banking into more of a parastatal kind of institution. And for you, how has the move been for you personally in terms of getting into SSNIT?
George, thank you very much, and happy to be here. I know we've been having conversations about sitting together, discussing your trust, our trust, and how it's doing. But importantly as well, it's been a refreshing first year in office for me and the team. You rightfully said I came from a private sector background from Absa Bank, but it would interest you to know that I had spent 21 years at ADB, that's a publicly owned bank. So some of the experiences of working in a public owned bank has been relevant. But importantly as well, my private sector experience has given me other dimensions that has really helped in shaping our strategy in the last 15 months.
When I say that, some are saying that, or some would always say that the private sector is quite rough and tough sometimes. How has that experience in the private sector helped you in that smooth migration for over the year now, or if just a year, as the Director General of Social Security and National Insurance Trust?
I don't think it's too different from what the public sector requires of top-level management. You have multiple stakeholders. There's always the need to excel in both a public service role or a private sector role. The difference, however, is that probably the owners of a private sector business are more demanding. But equally, if you see public service as an opportunity to serve and a privilege and an honor, you will be equally motivated to give of your best in the service of Mother Ghana.
This is quite, even if you were managing assets when you were in the banking sector, this will be quite a huge asset that you are overseeing. Do you see it as challenging, interesting, or it has been a learning experience that you have picked up so fast to move things on?
I think it's interesting, but importantly as well, I see it much more as people. Because in the trust, every decision we make is impacting lives, impacting families. So when you look at it from that perspective, you'll be conscious of the decisions you make, and you will be motivated to get the best out there for the Ghanaian people.
How is the scheme doing right now? Maybe the numbers might be looking good, but some would say that how is the Social Security and National Insurance Trust as an institution felt before we get into the fine numbers? The state, we hear the president do the State of the Nation address, the state of SSNIT as we speak now.
George, SSNIT is doing very, very well. Operationally, we are stronger than we've ever been. One of the first decisions that the new administration here took was to review our processes and to see the areas that we needed to improve. Secondly, we embarked on what we call a customer journey mapping exercise to go through the processes that anyone who enters our branches would go through, to see what needed to be tweaked, what needed to be changed, and how best we could bring efficiency and convenience to what we do, especially with regard to the people that we serve. And that was refreshing. So that actually resulted in a situation where today the processing of pensions has come down to only 7 days. It was part of that operational efficiency that we sought to provide. Mind you, once you become operationally strong, it becomes the building block on which you can then start getting the numbers, because it's the activities and the decisions that you make that would ultimately give you the outcome that you seek.
Help me out when you say that the process has now been reduced to 7 days. So if today I contributed whilst I was I'm on the scheme, and then help me out when you explain that it has now taken 7 days to process what, please?
Okay, so let's say you've gone on pension now. All your documents are right and you submitted them to us. On average now, it takes us 7 days to process your request to be put on the pension payroll to the very end. Because remember, we will need to do some investigations, we need to pick files, do some validations and all that. So that's what it means.
I knew that some time back you embarked on a project to kind of automate the system. How has that also played a significant role in this 7 days processing and trying to reduce the human element to fast track things?
Automation has really helped. But one of the things that I believe we need to work on is the mindset shift as to the use of our digital channels. You know, if you've invested in technology, but you haven't gotten people to accept it and use it, you will not get the benefits that you seek. And that is why we currently have set up a department whose core job is to look at our digital channels, to get people to use it, to get feedback and ensure that consistently we are nimble and improving for people to use with ease and convenience. So that really has been part of the success story. Now, the other thing is that we also made a conscious decision that we wanted digital to be default. And once digital is default, we need to go out there, let people know the convenience and ease that our digital channels bring, so that people will use it, and then face-to-face becomes complementary to the digital use, which is more convenient. Today, you wake up in the morning and probably the first thing you pick is your phone. You probably will go on WhatsApp. Let's look at how we live our lives. And let's give solutions that mimic how we live our lives. And through that, we bring convenience and service to the people that we serve.
Before I get deep into the bit about the contributions, I just want to backtrack a little bit also about the people as well. How have they also aided this transformation? Because some are saying that in the change culture, the people matter a lot in trying to make the scheme more appealing, the scheme addressing the concerns. The SSNIT and the people who drive this scheme, how have they contributed to this change thing that you made us aware or you talked about?
George, our people in this house are truly our strength. And we really value the people that we work with. I've met some amazing people with great ideas, great insight, and everything that we've built to date has been built by the people that we met in the trust. There's nobody on ESCO today who was brought from outside except myself and my 3 deputies. So it's testament to the strength of the human capital that we have in this institution. And a lot of the things that we've built have come from great minds and great people in the trust. Again, one of the first things that we did was that we made an innovative culture as part of our new blueprint. So we quickly set up an email address where people could share innovative ideas on how to make us efficient, attractive, and accessible to the people that we serve. And oftentimes, a lot of the ideas that have come up have come through that medium.
Do you think that SSNIT today is more efficient than just a year ago? I won't go too far, because the concern about some of these state institutions is about the fact that they are too slow in getting things done. Just backtrack just a year ago. Do you think that you're more efficient now in your operations, in the fund management, in getting things done?
Yes, we are more nimble now than we've ever been. And let me give you an example. Internally, we had a situation where one of our biggest cost line items was our medicals. So we quickly tasked the internal IT team to develop a solution that would enable us monitor our bills. because there were times staff would tell us we never went to the clinic, yet we are being billed. We developed an in-house solution within 3 months. So now, once you go into the clinic, you get the opportunity to validate the bills yourself. And it's giving us results that show that truly there were times that we were billed for services that were never rendered to our people. That's operational efficiency in operation.
Let's look at contributions to the scheme. How is it doing?
We're doing very well with regards to our contributions. Currently, the private sector accounts for about 58% of the contributions that come in, with the public sector accounting for 42%. The private sector employs 2/3 of our membership, so they are a very strong force. Contributions from the public sector has also been very stable, and I'd want to commend my boss, the finance minister, and government for helping us in that regard, because for the full year 2025, government ended the year without owing any man's contribution and actually cleared arrears from 2024 by Q1 last year. That helped with our contribution numbers significantly. This year has not been different. Jan to date, government has been regular with payments.
And this is not with the issuance of bonds or securities or papers, has it? What has been the form of this payment when it comes to government honoring the payments of these public sector workers?
Most of the payments have been cash. In fact, more than 70% of the payments have been cash. The only time that there was an instrument was for October to December last year. So we had an instrument issued in December, which was a T-bill. So it's actually a short-term instrument maturing this year. That was issued for October, November, December. But beyond that, all the payments from last year to date have been...
Was there a debt before, if you could even backtrack a year ago, that all of them have been paid that can be quantified?
So for 2024, government owed 1,050 million cedis. But by the end of March 2025, government had paid that in cash.
2025 as well?
2025, there's no arrears. We didn't enter. In fact, by the time we're entering 2026, government had actually paid ahead. Because, you know, as the month, at the end of the month, the SSNIT contributions come in by day 14 of the subsequent month. So we are in June. We expect May's contributions to start coming in latest from the 14th. Government in December last year actually made part payments of the bill that will be due in January for December last year, So by the time we got into January this year, government only owed a portion of December 2025 contribution. And that had never happened.
I mean, what is the scheme doing differently to get government honor its obligations? Because there are a lot of pressures on and I know that I don't envy the finance minister at all. In terms of signing the checks, there would always be priority. What has the trust been doing, or what proposals or what pressures are the managers giving to government that they appear to be honoring all these obligations now?
There's been a lot of engagement. Engagement with government as the broader group, engagement with the finance minister, who has responsibility towards the trust as the supervising minister. That has really, really, really helped. The second is that the finance minister particularly appreciated the state of the trust and recognizes the importance with which the contributions will have to come in and come in on time. George, you know, the private sector, like I said, contribute 58%. Now, and
they have always been very regular,
yes,
per your reports and the numbers that you put together.
Now, the private sector contribution, it's roughly just a little below how much we need to pay for pensions every month. So if government doesn't pay on time, it means we need to disinvest existing investments to be able to pay. And the finance minister has been dedicated towards avoiding us getting into that space, because you can't improve on the assets under management if you are disinvesting from earlier investments just to pay pensions. So that consciousness by the finance minister, that level of engagement and rapport between the finance ministry and us has really helped in driving what we see.
Help me with this 101 pensions here. And sometimes we hear people complaining, I have contributed to the scheme. And I look at sometimes the lowest person being paid on the scheme about 200 or 300 or 400. And somebody else is getting as much as a million or 200 or whatever I stand to educate it. Why that wide disparity? Does it boil down to how much you pay whilst you are working? And sometimes the advice to people is that, listen, don't be happy if a chunk of your salaries are being migrated to allowance and not meeting your SSNIT obligations. Help me appreciate why we still have this wide disparity. If I'm still paying maybe 10% of my salary to the scheme and somebody also doing 10% of the salary to is contributing to the scheme, why that huge disparity in terms of the benefits that someone is earning when they've gone on pension?
It's largely a function of how much you earn, because our scheme is a defined benefit scheme. So right from the beginning, one of the important factors in the calculation is the average of your best 3 years contribution. So if the contribution numbers are high during that period, then clearly your pension amounts will be high. Another factor is the pension rights. By pension rights, you know, once you do the minimum required to qualify for pension, which is 15 years, you start at 37.5% of that average. Okay. Now, each year, an additional 1.15, 1.2 roughly adds. So if the more you do, the higher your pension right, until you get to the highest pension right of 60%. So if your contribution is low, you likely will be getting lower pensions. A lot of the people that are on the base pension of currently 400 cedis, and remember the base pension had stayed at 300 from 2019 till this year when we reviewed it.
I'll come to whether
400
reviewed or not yet.
to 400 cedis. Those people, they are actually awarded. If you actually use the pension calculation, anybody in that bracket hasn't earned that minimum pension. We just made a conscious decision that this is the minimum that we would give anybody on our payroll, irrespective of what they are entitled to. So it's a function of that. And you raise a very important point, income consolidation. In the past, some allowances were not taxed. So people will try and ask, oh, why don't you increase our allowances? Remember that our pension as it is today is on the big salary. So if you push your benefits more into allowances, you are denying yourself of your future. And that's why I always encourage people anytime I get the opportunity to engage, that let's be conscious to improve on our basic salary, because that is the base on which our pension rights are calculated. That is the base on which our contributions are also calculated.
Who should be ensuring this? I know that I don't think that is part of your mandate, but help me out that as part of your public good and all the rest. Is something that you want to venture in? Because it appears that for a lot of people out there, I don't remember, or they don't remember the last time they checked their payslip to even see the deductions. I am working, you are being paid like 15,000, 20,000, you are happy. You only have to retire to realize that your employer was not doing the necessary deductions right. Who should ensure that this
that responsibility is ours. The law actually mandates the trust with that responsibility. And that is why the law has also even given us enforcement powers. So that responsibility is ours. However, we need partners. And one of the partners in that whole ecosystem is you, the beneficiary, to also check. And currently, it's very easy. On our app, you can check your contribution history so that you can flag some of these things to us quickly. We will continue to do what we need to do to protect you. But it's a collaborative effort whilst we have the legal mandate to ensure enforcement.
You spoke about enforcement, and let's look at compliance. Because there have been instances where you have to take on some institutions, and it's good that government is showing the way, so the private sector may have to follow as well. What are you doing in that area of compliance to ensure that if George Afreh and Co employs people, he pays them, and he's deducting a fraction of their salary for SSNIT contributions, and he's not doing that. What happens, George Afienko?
We've now defined compliance as a relationship problem, much more than an enforcement problem. So we're beginning to conscientize our members who go, the compliance officers who go onto the field, that seek to understand the businesses, be embedded in their operations. You will find out much more when you are engaging them regularly, when you are managing them as part of a pool that you are seeking to grow. When they are having challenges, you would know. When they are in boom periods, you will know. You would even find informal ways of validating the numbers that you are, because you understand the client and you are really managing the client from that perspective. So we've begun training our compliance officers to look at compliance from that angle. But of course, the law also gives us the enforcement right. So where we've engaged, we've jawed, we've sat down, we've negotiated, and all that is not working, then the last resort is for us to go to court to enforce and protect the worker.
And have you reached a situation before that you have to go through that route to ensure enforcement?
Yes, there's been situations like that. This year, for instance, in I believe sometime end of March, early April, we began a certain enforcement process, what we call mass prosecutions, to send a message out there that we need to do the right thing, and the time to do it was then.
Have you been able to recover quite a significant amount of money?
Yes. And interestingly, when you begin some of those processes, that in itself pushes people to start doing the right thing, because nobody wants to go through the whole court process. So it's been very helpful. That enforcement power helps us, but we believe that a stronger power is in relationship than just going to court and seeking to enforce.
You talked about digitization, and how has this digitization and efficiency of the scheme also play when it comes to payment of contributors fund? Because there are times when you see some of these people on pension going through public transport system, walking to the banks. Sometimes, I don't know the situation now, but those times you see them walking to pension house with their cars, trying to make sure that the payments have been done. I'm supposed to have updated my data. I haven't done that, so I've not gotten my money for the past 2 months or 1 month. I'm using that for medication. How has the system been able to address that problem of simplifying the process and making sure that if Ajua Mansai from Mantimankebi has contributed to the scheme for about 20 years, she can have access to her pensions way back in her village?
George, that digital journey over the period has really brought efficiency into our operations. Now, you would realize that today, whenever we send the money to the banks, even before the bank credits our members' account, we send notifications to the member to let them know that your money has already been sent to your bank. We explored paying some pensioners through Momo. However, the survey results that we got, over 64% were uncomfortable with Momo. So we've currently written to the MPRA seeking to make it optional for people who opt for that service. Thirdly,
they still want to walk to the bank and
they still want to walk to the bank.
My grandmother.
Yeah, like your like your grandmother. But going forward, some of the initiatives that we are bringing would also help pay in a much more easier way than we've had. So for instance, we are currently working on a member value program with one of our investee companies or a bank that we have investment in. The essence of that membership value proposition is to enable our members benefit from discounts when they go to retail outlets. So we negotiated with a couple of retail outlets and they've given us discounts for our members. We then got into the stage where we needed to identify how our members could be identified at the till point, and also for us to get the data for how the service was helping our members. And we got in touch with the bank. We almost there at the stage where I am confident that as we go into July, definitely we'll launch the member value proposition latest second week of July. It will come with a co-branded Visa card. Currently, you will have to load to get the benefits out. But we are beginning to think along the path that once that is successful, if you are opting that your pension should be paid onto the card, we will do so, because then you don't no longer need to load the card. Once you get to the till point, your card is already loaded with your pensions. So it's all about spending and enjoying the discounts that is coming from the member value program that we've embarked upon. So some of these initiatives are being put in place to make payments to our members or our beneficiaries as pensioners easier, seamless, and more friendly for the use for which they need their money.
So when we come back, Biney, I want to look at managing this funds and also what goes into the investment decisions of SSNIT. There have been, in the past, there have been serious questions about how you are managing this fund, and even the bit about, let's say, should there be a time that we can be contributing more to the scheme in terms of the sustainability. So this SPM Express Business Edition, I'm engaging the Director General of the Social Security and National Insurance Trust as we look at how do we sustain this scheme going forward. We'll be right back after this break. Welcome back to PM Express Business Edition as I engage the Director General of the Social Security and National Insurance Trust on the sustainability of the SSNIT pension scheme. I was talking about managing this scheme and making sure that the returns are good. What has influenced the trust's investment decisions? I know that there are policies that guide it as well, but has there been a review of that policy, investment policy, or it has been the same old thing, and how you place these funds and ensure that the scheme is very, very liquid to be able to meet all these monthly pension contributions?
George, thank you very much. The investment policy of the scheme was recently reviewed just last year and approved by the MPRA, our regulator, with clear guidelines on areas in which we can currently invest and the expectations from stakeholders. The thinking now is to move about 60% of our assets under management into fixed income securities. And it was based on the data. Based on the data, fixed income securities were giving us the best real return on investment. So that's actually what informed that, together with the fact that we are also a matured scheme. And hence, you need a lot more liquidity than investing in difficult to realize immediately assets. So that has guided some of the decisions we've made in terms of the policy side. Operationally, however, we've been conscious about the prudence with which we make our investment decisions. The real return that we seek from the investments is the overriding principle that currently guides our investment decision-making process. How quickly we can also get the money back, the payback period, has been a major factor as well, because once you are a mature scheme like ours, you need to make sure that the investments you are making are not only yielding the returns, but they are yielding the returns to come in at the time that you need it for the payment of pensions. Our scheme is a partially funded scheme. When I say partially funded scheme, in a year in which, for instance, contributions that come in aren't adequate to pay pensions, we will need to follow our investment to pay. For some schemes, it's a pay-as-you-go. So in those schemes, if this year our pension payout requires us to collect contributions at 18%, that 18% then defines it. Nothing is kept for investment. So a pay-as-you-go is a straight match of contributions coming in against payment, and it closes each year. But ours is different. Ours is a partially funded one. So there's been times in the past where our benefits payout were actually more than the contributions that came in. And that's why prudence in the way we invest, the guiding principles around our investment matrices needs to be strictly adhered to protect the scheme.
This review that you spoke about in terms of moving it more to liquid assets, if I stand to use it rather, this treasury bills and all the rest, what would be the implications of that on some of the current investment that you have? You have some significant holdings in the financial sector. I stand to be corrected. I don't know any financial institution worth its while in this country that SSNIT has not got a stake in it in central investment. What would this review in your investment positioning or standing or post, if I can use that expression, mean for these other investment or assets or current holdings that you have as we speak right now?
Whilst the investment policy provides some policy guidelines, we also need to be conscious of market dynamics. So for instance, last year and even this year, we've invested additional money in some banks. Because why? Because they are giving us good returns. And beyond, the banking sector gives us the best with regards to our dividend history as a trust.
Interesting.
Yes, by far. Okay. Now, if you also have a bank that you need to help capitalize, you will. Conscious of the fact that there's growth in that investment. If you take a look at our assets under management, part of the reason for the significant growth in our assets under management has been the performance of some of the banking stocks on the stock exchange. Take a look at EcoBank, take a look at Stanchart, take a look at GCB. It's been phenomenal growth with regards to those investments. So yes, we're seeking to invest fresh capital, fresh liquidity, mostly into fixed income securities, but we are also tapping into other opportunities that come up. As we sit here, we have significant investment in terms of value in MTN. And we will seek to put more money in MTN when shares are available.
Rights issues and all the rest.
Because it's the right thing to do. Their returns, the returns we've had from our investment in MTN has been super good. And now MTN has even gotten into the space where they want to be paying quarterly dividends. That's actually moving it from a pure dividend structure to like like a bond structure that gives you a certain assurance of liquidity every quarter. So when you have investments like that coming onto the market, it may not be a fixed income security, but it's one that meets the ultimate goal that you seek to have. So yes, we're doing that. We're putting more money into our energy investments because that energy investment has grown and it has given us value. So not only are we getting value, but we are also helping power Ghana. So those decisions would also come in. But broadly, we've sought to invest more of our fresh liquidity coming in into the fixed income. And
that
market.
energy has to do with that independent power producer.
Independent power producer, SSNIT Energy. I mean, SSNIT currently at Intema has 110 megawatts plant. Hopefully, getting into latest July, we should be commissioning another new 110 megawatt plant in Awomasu, in Kumasi for SSNIT Energy. We've started the process, and I believe that shipping will be starting soon for another 330 megawatts power plant for SSNIT Energy as part of our investment diversification strategy and pool.
I know you spoke about an instance where the payout has been more than what has come in. Again, in doing all these things, are you guided by this philosophy or principle that these investments should be made in a way that at any point in time when I want to call on the cash, if I could use that word literally, I would not be struggling?
George, let me tell you, our liquidity is very strong. We've paid pensions successfully for the past 60 years and will never fail. Today, as we speak, our fund ratio has improved beyond what it was years ago. By the fund ratio, how long it will take us to pay pension benefits, assuming no contribution comes at all.
How many years?
Per the last actuarial report, it's really come significantly. Some of these numbers, we will have to manage them. But truth is, that has improved. Our pension payout, like I said, there were years in which our payout was higher than our contribution rate. Today, our payout has dropped from the over 100% down to around 78% and coming down further. The way to bring further down is to get new members to join the scheme. And that's why we've tried to improve on accessibility. Once we are accessible to the people who need to engage us, it becomes easier to enroll new members. So on our digital channels, you can easily do self-enrollment. Through our virtual branch, you can easily enroll with us. Beyond the traditional branches of the trust, we've now entered into co-location arrangement with banks, where you just go there. Trained officers are posted into the banking halls of the banks so that they can assist you and provide the full bouquet of our services as if you have entered our branch. Today, you don't need to move from Akosombo to Somena to have SSNIT services. You go to Akosombo GCB. Today, you don't need to move from Mpraiso down to Nkoko. You go to CBG in Mpraiso, you are served. You go to Ring Road today, you don't need to move to the closest SSNIT office. At Ecobank Ring Road, you are served. Yeah. If you go to the Savelugu Road, coming from Boga, you don't need to get to our office. Once you get to Kamina Barras area, you have an Ecobank there.
I know the Ecobank Rigo because I bank there, so I know that I see officers there as well.
Exactly. So, with that strategy, we've moved beyond our core touch points into partner touch points and serving our people better. And this year alone, we plan to have 50 such touch points this year to ensure that we are really, really, really accessible to the people that we serve, because that's one of the ways to grow the
in terms of this actual report, how current is this report? Because I remember in the past there was this WHO report or ILO, sorry. There have been some think tanks that have put out some report that have raised concerns about the sustainability of this SSNIT pension scheme. How current was this analysis that was done?
John, let me tell you, our scheme is robust and very sustainable.
How robust?
I'll tell you. The most recent actuarial report was made available to us this year. External actuarial report done by the Government Actuarial Department of the UK. The previous one was done by the ILO. That was based on 2020 numbers. And it flagged some issues that we needed to work on, without which we could risk the scheme. So what was important was for management to look at the report and respond with the right strategies to solve for the issues that have been raised. The current one that was just made available to us this year was based on 2023 numbers. And that one alone tells us that based on the new report, our sustainability has moved by an extra 40 years. That's even based on 2023 numbers. We are required to have an external actuarial exercise every 3 years. So at the end of this year, there will be another actuarial exercise into 2027. I am confident that that would even move us into safer waters, much, much safer waters. Why do I say so? In 2024, the government of Ghana had owed the SSNIT for about 18 months in contribution arrears. That was paid with some government bonds in around May 2024, about 2.5 billion cedis in May 2024. That clearly brings in extra liquidity into the trust. Current government has no owed, so our liquidity is much stronger than it's ever been. That improves it. We have expanded on coverage, because part of the issues that was raised was the need for us to expand coverage quickly and improve on compliance numbers as well. So we've expanded coverage. In our current medium-term strategy, which has just been approved for 2026 to 2028, we are moving coverage from 2.1 million members at the end of 2025 to 2.8 million members by 2028, an average growth of about 300,000 new members per year. And this year, we are on track. Once we get these numbers right, it further improves the trust. Our assets under management has grown astronomically.
Ending last year, how much was that?
Ending last year, our assets under management was worth in excess of 27 billion. At the end of 2024, our assets under management was 20.4 billion. 2025, we ended with 27 billion. Our real return on investment, in fact, if you take out 2021, our real return on investment from 2020 had been negative. In 2025, our real return on investment was 8.02% growth, up from a 2024 negative figure of 4.2. As at March this year, our assets under management again has grown to over 33 billion, with our real return on investment being in excess of 15% plus. So clearly, this is a scheme that is doing well. The numbers have improved, and we are in a much better space than we were 2020 or 2020.
So the concerns about the sustainability of the scheme and the scheme is under threat is not well grounded per these external, and I could hammer on the word, independent actual reports.
No, our scheme is not in danger. However, for any scheme like ours, we need to be agile. We need to respond right when risks are flagged. And for us to take the critical decisions required to ensure that we address those risks so that the red flags that have been flagged do not come hitting us. For me, that's the most important aspect of the evaluation exercise or the actual evaluation exercise that is done every 3 years.
I mean, there were also talk about increasing the contributions as well to the. And I know something that it has to be grappled with. This is PM Express Business Edition. We'll be right back after this break. Welcome back to PM Express Business Edition as we look at sustaining the SSNIT pension scheme in Ghana. What are the threats? And with all these external pressures, are we in safe hands that when you go on retirement, you can be enjoying your pension in peace and not in pieces? I'm engaging the Director General of the Social Security and National Insurance Trust. So I get that firm assurance from you that you can go to sleep because your contributions are safe in terms of it being tested, as in the safety as well. We don't see any threat as we speak right now.
No, George. As we speak right now, your trust, our trust, is in safe waters. As we speak right now, per the last actuarial report, okay, it takes us into 2072.
And these are independent.
This was done by
actors.
the Government Actuarial Department of the United Kingdom.
Okay.
It takes us to 2072 based on 2023 numbers. And like I said, 2024 numbers, 2025 numbers are far better than 2023 numbers. And I'm confident in the strategies we've put in place to expand coverage, improve on investment, get greater returns on our investments, reduce our cost to serve. All these measures would help grow the fund. Now, on the bit of even support, currently, on average, we have 8 active members supporting each pensioner. That is in line with international best practice. 8 to 1. It's in line with ISA's own guidelines. So I am pretty confident of where the scheme sits today.
What do you make of proposals that maybe the time has also come to improve contributions as well to this? I know it's something that it has to go through NPRA and all those things, but do you think that it's something that needs to be given that listening ear? I know that your biggest contributor, government, has to give the blessings and all those things. Should we see some marginal review, something that you propose to your board, to government stakeholders to take a second look at whether we should look at reviewing the contributions to the scheme?
There are current ongoing conversations around how best to improve on contributions that come in. One of the ways out is to consolidate salaries. Because even at that same rate, it means that the contributions will be more than they are today. One of the conversations that had come up is to consider an increase in rate. But mind you, there is a limit to which you can just use rate increases to improve the numbers. Ghana, as we speak today, we are only second to Guinea-Bissau in terms of contribution rate. Guinea-Bissau is at 22%. Ghana, mandatory for the scheme we run, is at 18.5%. And I say for the scheme we run because our scheme is for pensions and invalidity. There are some schemes that do things like accidents, dependents. So if you take Senegal, for instance, Senegal is actually the only African country in the top 20 globally in terms of rates. They are at 37%, the mandatory scheme. But their benefits are totally different. So their structure is different. For those who run like our scheme, in West Africa, a rate of 18%, 18.5, sorry, is only second to Guinea-Bissau. In Africa, it is at number 7 for the scheme we run. Okay. Now, if you are considering all mandatory schemes, then in Africa, we are around number 28. So then that's where those who say, let's increase the rate come in. Because you may have to increase the rate and also the benefit.
Do you think we should do that?
I think that on a personal level, I think that if you take a look at our pension contribution rate, quite significant numbers have been put in the optional bracket, which is the tier 3, what we call Provident Fund. That's 16.5 there. There are many organizations that don't have that. If we make a portion of that mandatory and assign that, for instance, to SSNIT, it would help cushion the worker. Because then it's no longer just an optional thing for an employer to decide, but it's one that is mandatory. If you add that 16.5 to our existing 18.5, it takes us to 35, which is only 2% below Senegal, for instance. It would immediately probably catapult us into number 2 in Africa from the current number 28 when you are looking at the total picture. So there are some conversations that we all need to sit at the round table as stakeholders and decide on without necessarily seeking to increase rates.
There should be a debate. But do you think that even the contributions that you have taken, and if we subject that to strict analysis and review, you've done well in terms of return on investment? Because some have said that post the pensions reforms, we look at the tier 2 and what they've done, and there are questions about really is SSNIT managing these funds very well?
I would say we commit ourselves to manage this fund well. Now, at times, some of these comparisons need to be...
It's not fair, right?
It's not fair.
Apples and oranges.
Yeah, it's like they are like apples and oranges. You have a tier 2 system that doesn't have a lot of maturities. They don't have to pay monthly pensions to 267,000 pensioners. The tier 2 funds only came in recently. A lot of people haven't even gone or matured to go for their benefits. As against a fund that has been there for 60 years.
But it was always coming, fresh funds were coming in.
So fresh funds were coming in, supporting. What is important for me at this point is that we need to expand on coverage, grow the numbers, improve on our returns on investment as we are doing, and in doing so, we'll build a more sustainable fund. And once we build a more sustainable fund, some of the concerns that our stakeholders have will naturally be addressed. Let me give you a story. When we came in, Trust Hospital had been making losses. We said it's unconscionable for a hospital of that size to be making losses. So we sat with the board and management of the hospital and developed a blueprint to turn around the hospital within 2 years. And we've done it. I mean, in 2024, the hospital made a loss of 25 million. Last year, they made a small loss, a little above 3 million. But from Q1, Q2, they made loss. Q1, the new management had not taken over. So they still made loss, 4.7 million thereabouts. By Q2, the loss had come down to about 1.9. By Q3, they were making profit. Q4, they made profit. Q1 this year, they've made profit. Because we made it clear that we will not bail out any subsidiary that should stand on their own and support the trust.
Their fees have been going up regularly.
Well, we need to compare to the private clinics. This is a private investment.
Okay.
We need to get the investment to protect you. Once we are not outpricing out of the market, and we are actually pricing within a certain median range, it is fair. But I just wanted to share this because it gives me the assurance that turnarounds can actually come much quicker than we had even initially projected. If you take LAPAM.
I'll come to the hospitality sector as but let me also throw this thing about proposals that let's look at extending the year that the pension a year as well. It's come up a lot of times as well. What do you make of those proposals in terms of if we are not touching the rate What about allowing people to retire a little bit later? Because people retire and still go back into private sector and work because they want a safe pension.
I agree that the demographic numbers have shifted rapidly. A lot more people today in Ghana are living longer, are much stronger even after 60. I agree. But a decision to extend retirement goes beyond just that.
Okay.
You need to consider factors like your employment rate, unemployment numbers, availability of jobs. So we all need to go and sit together as stakeholders, brainstorm, deliberate, and ultimately come to the point where we all make a decision than an individual institution like SSNIT deciding, guys, let's run. Because of course, if you extend the pension years from, let's say, 60 now to 65 or 67, what it practically means is that my payout now will reduce, whilst more contributions will come in. How do we juxtapose that against probably creating another backlog of 5-7 years on unemployed youth who could have come into the employment bracket? So we need, all of us need to sit down, look at the numbers, look at the various alternatives, the opportunity cost of taking a particular decision against the other, and then we take a much more comprehensive decision.
Quick back into your investment decisions and holdings. You were also very heavy in the manufacturing space as well. Are you scaling back or reviewing your investments and holdings in that particular sector as well?
We're reviewing our investments and holdings across all our asset classes. The focus is to ensure that we get the best returns from each one of them. Now, some of our manufacturing investee companies have done well, but obviously based on the numbers. The services sector is giving us better returns. The banking sector is giving us better returns. Telco is giving us better returns. Energy is giving us better returns. But manufacturing is also important because it's a catalyst for higher employment numbers. So we haven't shied away from that space. But we would analyze each proposal that comes onto our table based on the targeted return that we want to have and the payback period that was required to bring the investment back into our kitty to enable us to pay pensions.
Let's come to the hospitality space. And one area that rings the bell always has to do with La Palm and Labadi Beach Hotel. If the story that we hear that they are now making some good profits, does it mean that going forward as a shareholder, your worries are over, the companies are turning around? We don't need any fresh capital investment. We don't need to bring in any strategic investor to handle some of these spaces in terms of the hospitality sector, especially when it comes to Labadi Beach Hotel and La Palm Beach Hotel.
George, let me assure the people of Ghana that we will not sell any of our hotel investments.
That is generic. Selling could be that there are shares, strategic investor coming in. It could be a forceful takeover, and also help.
Let me give you some details. Labadi Beach Hotel is one of our best investments. In fact, they have consistently paid dividends year in, year out. Last year alone, based on 2024 numbers, they paid us 17.8 million cedis in dividend for the year 2024, but they paid it last year. This year, we expect the dividend to be paid by Labadi to be higher once their accounts are audited, to be higher than they paid last year. Last year, they made a PBT in excess of 67 million, with a profit after tax of in excess of 50 million. So clearly, if you go by their dividend payout ratio of 40%, they will pay higher than they did the previous year. The Golden Beach Group, which consists of La Palm, Elmina, Buzia, is challenged. So whilst we've sat with the board and management and strategized on a turnaround, we felt that we also needed technical insight and expertise from consultants. So we advertised for consultants to tender and provide us with a business blueprint on turning those hotels around in 5 years. We are evaluating that tender, and once we select the consulting firm to do that exercise and the report is ready, we will definitely engage stakeholders on what we want to do. But even before that, some of the accountability measures we put in place is beginning to yield results. La Palm last year, for the first time in fact, we don't even remember the last time La Palm made profit. Made profit. It may be small, 1.8 million. But at least bigger things start with humble beginnings. The turnaround process is beginning. Now, you may say, oh, would a strategic investor, if a strategic investor is coming in, that can be considered as a sale. Let's say, please pick Elmina. Elmina today makes losses for you. Elmina requires extra injection of fresh capital to turn around. Let's say you sit with an investor and lease Elmina out and say, okay, this is the size of our investments. We are leasing it out for a period. Pay us 10 million every month. Sorry, every year. Run it. If you make margin, it's for you. But invest in the assets to ensure that the asset is kept well. And pay us, let's say, 10 million every year. You've then moved from a negative return to one in which you are beginning to bring money into the kitty without even selling. But I'm not saying we have even gotten there. I'm just sharing with you some management models that could be adopted. But we would first have to wait and get the work done by the consultants. The report is in. We would look at it. But I can assure you, we will not sell any of them. To the contrary, we are actually engaging Labadi on expanding Labadi. The number of rooms that Labadi has. There are conversations today to expand Labadi. So it should tell you that where our investee companies are doing well, we are prepared to support, and we'll make sure that we protect the workers' funds that we hold in a fiduciary.
So if I get from you, it's a no that there isn't any attempt to bring in a strategic investor for Labadi Beach Hotel, because if the problem is a cash problem, that investor brings in fresh capital, that would not be described as a sale or, listen, George, George, there is absolutely no conversation anywhere about Labadi Beach Hotel. Why? Beach Hotel? When Labadi can even go to a bank today and borrow, because Labadi has one of the best balance sheets. So even if they decide not to come to SSNIT for funds and decide to go to the financial market, they'll be successful. If you make a decision to list Labadi Beach Hotel on the stock exchange today, they will be successful. So why sell? La Palm Beach Hotel?
La Palm Beach Hotel, yeah. We will not sell La Palm.
In this analysis, and I don't know what the consultant has said, is it a liquidity, a fresh capital injection problem, or it's a management problem?
Because the report isn't out, we can't predict what would come from the report. From a cursory understanding or a deep dive into La Palm from a banker, and now I'm speaking as an ex-banker, I think it's three things. I think it was a management problem that we've sought to solve now. I think it needed fresh capital injection to refresh the hotel up. But importantly, that hotel sits at a prime space. That's Ghana's only real proper beachfront property. Yeah. So whilst those two are being worked at, we need to tap into the advantage of its location and derive value from that investment.
What do you tell those who would say that you have boxed yourself in very, very hardcore stuff? Maybe the time has come to let somebody else who can manage these hospitality space for you well, so that you just concentrate on your core functions as a SSNIT fund management company. Oh,
clearly we are not hoteliers. So even Labadi that is not doing well, it's not managed on a...
Sorry.
Yeah, but for instance, they are not managed on a day-by-day basis by us.
Okay.
You have...
The Golden Beach. Yeah.
You have a management team in place. You have a board in place. We are only shareholders. And it's same for La Palm. They have a board in place. They have a management. So the engagements that we do have with them are shareholder engagements with management and boards, of similar to how a company listed on the stock exchange would have to account quarterly to its shareholders for its performance. That's what happens. Now, I get where you're coming from. Would they be better off with, let's say, La Palm becoming or being run by, let's say,
maybe a Lord investment,
or a Movenpick, or a Marriott or an Accor.
Yeah.
When those proposals come up, we'll have to review them as shareholders and make a decision. But those are not sales. I mean, the fact that, for instance, the Marriott in Accra is not owned by Marriott.
Yeah.
Marriott owns the franchise and provides some management support. Similar options can be considered. But we have to be patient enough to wait for the reports to come through, which will then guide us on the way forward.
Let me also look at your real estate space as well. And there are people who are worried that we are seeing a property boom in Accra, or my son should be educated. It is going to burst very soon. You are very heavy in that space as well. Recently, you even had a media engagement about telling people to come and buy and all the rest. There are people who are worried that the bust is imminent. What guided your decisions into these real estate space that you are quite heavy in?
You know, we are also a social institution. So at a certain point in time, as a country, we needed accommodation for workers. That got us into the whole SSNIT housing that came up. And real estate, for many investors, will tell you, is good investment. So that's what guided the trust at that point in time. Under my administration, we have made a decision that direct foray into real estate we will scale back and rather begin realizing some of the gains, because we have apartments that we are now selling. If you are not done selling what you've already built, why should you go and put more money into building? But irrespective of that, if today we have land banks all across and we need to partner others to build with our land as equity, we would consider it. Because in that context, we're also protecting the land and bringing value to the trust. So it depends on the kind of investment. But us going to put fresh capital into building new properties, we have decided until we sell the current ones, we will not.
What is the plan to bring on fresh contributors to this scheme? Because you see the young generation and the salary packs and all the rest, and I believe that there's a lot of them who are not even thinking that they will come, they'll go on pension.
It's to make the scheme attractive beyond what I came to meet. The scheme that we have today has a very solid value proposition. The pensions that we provide are one of the best globally. Our invalidity, do you know that, for instance, if you become permanently incapable of working and you've only contributed for 12 months out of 36 months, you qualify for invalidity pension. The youngest pensioner today is 32 years. There are pensioners on our invalidity pension earning in excess of 20,000. This is a scheme that protects and rewards. Now, beyond the core benefits, what we sought to do is to introduce things that we call beyond pensions, which is part of our strategy to enhance the value proposition and make the scheme attractive. And that is what informed the decision, for instance, to introduce telehealth, which we just launched yesterday. In July, we'll be launching the member value proposition that enables our members to get discounts from partner organizations that we deal with. Because for the informal sector particularly, at times telling them that join the scheme, get pensions many years ahead of you. For some of them, the alternates that are available offer them some propositions that are more attractive. If he's done a susu and he's hard up, he can go and collect. So for him, that long-term view may not be attractive. So whilst we will continue to make people aware of the benefits of the scheme. We are trying to also introduce other things that makes the scheme attractive in the short run, so that people would want to opt to be part of the scheme beyond enforcement. That's one. Two, we are making joining the scheme very seamless and easy. You don't need to, as it is today, you don't need to move into any office of ours in the comfort of your phone. You can just sign yourself up and you are done, bingo. You can change nominations, you can make payments, you can even pay when you want, because in the informal sector, people are not paid lump sums or defined amounts at the end of each month. So today he gets 200 to, so our payment instruments on our digital channels are such that if today you want to put 50 cedis aside, tomorrow 10 cedis aside, you can actually build up until the sum that is required to pay each month is ready before it moves into our wallet. We are making sure that we are making accessibility to us easy. We are making sure that we are attractive. We are making sure that we are letting people know the benefits of the scheme, because people ought to be aware. Our engagements are strong. Recently, I toured the whole country with the TUC. Met the TUC leadership across all the regions. We listened to them and got feedback, which is informing some of the initiatives we are putting into place. Okay.
Inflation has gone up. I don't know when next is going up to about 3.7 as well. In terms of your indexation and all those things review, when are we going to see the next reviews? Not tied to particular date, but do you think that as time goes on, you're looking at also other options to review this indexation and ensure that those who might be the lower band will still get something more than what they are taking up now?
We always take care of the underprivileged ones amongst us. The next indexation would actually be in January 2027. But there are also things that we are working on. You know, when I came in, I looked at the World Bank data on what extreme poverty is. And it said anyone earning below $2 a day. So I got the actuarial team to do an analysis for me to see if we could explore moving those at the lowest end to that benchmark. We realized, no. The numbers wouldn't support that. But we are currently working on an initiative, and we are going through the numbers. What we are seeking to do is to introduce a product, especially for the informal sector, such that you can define for yourself that I don't want my pension to be below extreme poverty levels. So right from day one, you know how much you are contributing would assure you that by the time you are on pension, we will be paying you a pension that is above that, because our strategy is to see how we can lift as many people out of the extreme poverty bracket into a safer zone.
Next year, 2027, I'll be back to engage you to find out how all these strategies have impacted the bottom line, the contribution of the funds, its activity, its returns, and all those things. This has been PM Express Business Edition, engaging the Director General of the Social Security and National Insurance, Mr. Kwasi Afreh Biney, on a lot of options that they are putting in place to deal with any sustainability concerns and ensure that 40 years from now, the scheme will still be working. I appreciate your time so much, and I'll come back again to see how things have turned around in terms of the management strategies that you put in place there.
Thank you very much, George. It will be an exciting opportunity to review the year under review and to share the success story with you.
This has been PM Express Business Edition. Have a great day. I know the debate is to go on in your homes and offices about what more can be done to sustain this scheme going forward. My name is George Afreh. Have a great day.